Everyone interested in the crypto space right now has undoubtedly heard of the FTX bankruptcy and the market crash that came along with it. Typically, when we think about losses in crypto investments, we think about the average retail investor on the receiving end of it. However, FTX was at such a large scale that it affected institutions who invested as well. And surprisingly, this included the Canadian government. Today, we will talk about how the FTX fiasco affected the institutions that invested into it. Among these institutions are the Ontario Teachers Pension Plan, which funded a huge amount, a total of $95 million, which got drained overnight. To make matters even worse, there are also other Canadian government organizations which faced the same fate, having a similar approach in choosing where to invest. Hold on to your seats because we'll be going over such cases of institutional investments from the Canadian government and Canadian agencies. Let's get into it. The last quarter of 2021 was phenomenal for crypto. We saw Bitcoin reaching an all-time high of $69,000. At this time, the crypto market as a whole was in a frenzy as institutions were getting busy in finding the next big moonshot investment and expanding their portfolio into emerging markets. The fund managers from Canada's third largest pension plan, the Ontario Teacher Pension Plan, was no different, and they made their bet on FTX, one of the largest crypto exchanges. FTX in its Series B fundraising round raised $420 million at a valuation of $25 billion at that time. There were many large investors who jumped in and tried to bag some equities at a very early stage, thus ballooning up the valuation. Big players like Sequoia Capital, Tiger Global, Lightspeed Ventures, BlackRock, and of course the Ontario's Teachers Pension Plan also took part in the funding round, which a year later turned out to be a disaster for them. This is very significant since Canada is among the top 10 economies in the world, and Ontario is the largest province in Canada by both population and GDP. The Ontario's Teachers Pension Plan invested $75 million in FTX International during the FTX Series B funding round that took place in October 2021. Along with that, they once again invested $20 million in January 2022 as a follow-up investment for FTX US, the United States-based FTX entity, making its total investment of $95 million. FTX successfully pulled off the funding round and was on the news along with its founder's CEO Sam Bankman throughout the year 2022, but it was short-lived. We all know where FTX stands now, a bankrupt company which lost the funds of over 1 million customers. The company, which was valued at $32 million in January 2022, is now almost zero after going bankrupt. It owes $8 billion to its customers after secretly transferring funds to its private trading wing, Alameda Research. The Ontario Teachers Pension Plan Fund's wing, the Teachers Innovation Platform, invests into emerging, technology-driven, innovative businesses. Their venture into the cryptocurrency exchange clearly didn't go quite as planned. The public statement from the Ontario Teachers Pension Plan officials have confirmed that they will be writing the FTX investment down to zero at year-end. Luckily, it's not all doom and gloom. The Ontario Teachers Pension Plan website suggests that the pension fund is investing for 333,000 working and retired teachers in Ontario, Canada, and are currently holding about $164.5 billion in net asset value. This means that although $95 million is a lot of money, it's actually only about 0.05% of the total portfolio, so it's safe to say they'll survive. A similar incident occurred on July 13, 2021, when another cryptocurrency lending firm, Celsius, went under and filed for bankruptcy. Quebec's pension plan, a Canadian pension giant, had a fund of over $291.4 billion and is the second largest in Canada. The pension fund invested $150 million into Celsius, which has now been completely wiped out. Celsius was also a major cryptocurrency financial institution with a large user base, where the users can take a loan in crypto by using their Bitcoin, stablecoins, or any affiliated cryptocurrency as collateral. Also, there was an earn program under Celsius where users were given high yield in return for keeping the cryptocurrency with Celsius. This high yield was their best tool in gathering users for their platform. After the bankruptcy was filed, the investigation team found out the safekeeping of the users' cryptocurrencies didn't have any proper audit or documentation. In fact, they were using Google Sheets to manage accounting. The investigation says the Terra Luna massacre and depegging of their stablecoin fueled the crisis. Fortunately, once again, this investment was a very minor portion of Quebec Pension Plan's total fund, so it's safe to assume they'll be just fine. Throughout the entire video, we've been talking about how Canadian pension funds have been losing hundreds of millions of dollars from poor investments. However, there is a bright side. It seems that Canada is becoming a frontrunner in the cryptocurrency space for institutional investing. Canada's regulatory board, the Investment Industry Regulatory Organization of Canada, IIROC, is effectively working on breaking in laws that will help institutional investors to directly get involved in cryptocurrencies. The retail market is booming, as a survey suggests that about 38% of Canadians believe cryptocurrencies will play a vital role in the financial system and the monetary breakthrough in Canada in the coming years. Something hot is brewing in the Canadian crypto space, as on October 12, 2022, Coinsquare was given a license to carry out trading as a method of an alternative trading system, ATS. Alternative trading system is a term used in the United States and Canada for non-exchange trading facilities that are regulated under an authorized commission. Basically, what Coinsquare would be doing is it will settle large buy and sell orders and act as a broker, and not in an exchange. The best part is that it will be regulated under the Ontario Securities Commission, OSC. Coinsquare will be settling trades of huge volume among institutional investors, allowing investments into Bitcoin, Ethereum, and other crypto assets at bulk, and providing a regulated trade that was not possible in this way before. This regulatory breakthrough came from IIROC, so it's a giant green light for big fund managers to add cryptocurrencies and digital assets, mainly Bitcoin, into their portfolio. IIROC is a Canadian regulatory organization which makes sure all trades and investment activity on Canadian debt and equity markets are safe and protect investors. It is expected that more Canadian institutions will be encouraged to invest into the crypto space, as they will have insurance on their investments from the Canadian Investment Protection Fund, CIPF. It is a sigh of relief that both of the Canadian pension funds mentioned had only invested a very small amount, roughly $245 million, of their collective net assets of roughly $456 billion US. However, it has created a negative impact for the overall crypto market and cryptocurrency projects, since people will have to be more cautious about the crypto space since it's not fully developed yet. Only time will tell if newer investments will be made into crypto projects from institutions like pension funds in the years ahead. If you enjoyed the video, please leave a like and subscribe. If you didn't, leave a comment letting me know what you want to see next and how I can improve.